All right, welcome back to Global Monthly. I'm still in conversation with Glen Finegan of First State Investments. They have an India subcontinent fund which has holdings across sectors. So let's talk about that a bit more with Glen. Glen, the India subcontinent fund essentially highlights that the focus on India has been strong at First State Investments. The portfolio is pretty diverse. I see consumer stocks there. There's Marico, there's Dabur, there's Hindustan Unilever. So you're really playing on the consumer story in India, despite there being some stretch in valuations.
Yeah, that's fair. Absolutely. Our holdings in the consumer have come down, but we retain positions in the companies that we perceive to be the highest quality, and companies like Hindustan Unilever, which actually we don't think is too expensive, are extremely well run, and there's been quite significant change at Unilever, the parent, which are having quite big impacts on operations in India. Then we think there'll be very positive impacts. Essentially, we think Hindustan Unilever's market share should increase.
Okay. I also see Satyam Computers in your portfolio. Give us thinking behind that, because you just highlighted that you are looking at quality companies, and given the little background that Satyam had about 2 years back, what got you to take exposure or take position in the stock?
Yeah, I think Satyam's a great case study of how we go about investing. We've been investing in the Asia Pacific market since 1989, and analysts on our team have been meeting with Satyam for a very long period of time. We would meet them on almost all of our investment trips to India. If you were to go back through our notes, you would see that there was a level of discomfort with the alignment, with minority alignment with management, and a level of distrust around that company's financial disclosures. And there were a number of deals that company had done in the past that were warning signs that led us to believe that this was not a very high quality company. We didn't hold it. After the scandal, and it was disclosed that they were falsifying their accounts, and there was a very significant change. Mahindra, through Tech Mahindra, came in, and they changed the board of directors. And for us, this was a very significant event, and Satyam was trading very cheaply post the event. So this was very much a sort of corporate governance turnaround. So we really thought this was a company that had become, something had changed that meant it was now a good quality company trading at cheap valuations. So
you were fine with the fundamentals. It was only the corporate governance issue that was keeping you.
Absolutely, yeah. We've had investments in Infosys, and we do now in Wipro before, and we believe the Indian outsourcing model is sustainable, and we think that these companies, there are companies in that space which are very well run, and we had concerns about Satyam specifically. Of course, these were resolved when the management were removed.
You have holdings in the telecom space as well, Bharti especially. What's the call in the telecom sector right now, given that there's been a little bit of a turmoil there?
Yeah, absolutely. I mean, one of the things that stands out is that India is a popular and quite expensive market, and but the telco sector not so. The valuations of Indian mobile cellular companies are reasonably attractive, particularly given the scale of the market and the size of that. If one is willing to think forward as to how big the market might be in 5 years' time. Another thing that attracts us to Bharti is it has been an extremely well-run company, and it's also one of the Indian companies to globalize. And we think that if they can do in Africa what they've done in India, which is the sort of minute factory model, that they will be very successful. As the incumbents in Africa are milking quite profitable franchises, which we think Bharti will be able to shake up and hopefully grab quite large market share.
I've also seen names such as Tata Power, from the state-run companies, Container Corp, and also Mahindra & Mahindra, given that you have a lot of confidence in the Mahindra Group in your portfolio.
Yeah, absolutely. We also, another group, you're absolutely right, Mahindra, we have an awful lot of respect for. Another group that we have a lot of respect for is the Tata Group, and Tata Power is actually trading rather cheaply at the moment, we think, relative to the capacity that it's currently building. So again, when one stands back and takes the 3 to 5 year investment view, we think that this company offers a very attractive investment opportunity. The Container Corp, that's right, sorry. Container Corp is, you're absolutely right, a state-controlled company, but their franchise is absolutely second to none in terms of their positioning and all of where they have their yards all along the Indian railways. And it's within the ownership structure that part of, whilst they have to interact with the railway ministry, and Indian Railways, the ownership of Container Core is held by another part of the government. So there is a check and balance, if you like, there. So we do feel that that there are sufficient checks and balance there to ensure minority protections minorities are protected.
Okay. I was also reading in a recent note where some changes were made in the portfolio from the broader market space, the mid caps and the small caps. You have bought a bit of Trent and sold off some positions in Bosch. How does the churning work?
Well, Bosch is a company we like very much. It's got an excellent franchise, but we felt that valuations were getting rather stretched. Trent is a very interesting company to us. It's from the Tata stable, so we have a lot of faith in the integrity and alignment, if you like, as minority shareholders. But also retail is so early stage in India that if one is willing to take the longer term time horizon and think about the size of franchise that Trent might have on a 5-year view, and even further out, then ultimately the market cap now certainly doesn't reflect that.
Are you wary of coal companies in India, because you have a notion that the lack of clarity in awarding coal licenses does not make you comfortable to enter the mining space?
Yeah, we have a bias across our portfolios against the material and energy sector. It's partly because the earnings are so linked to commodity prices that they're very volatile, and we much prefer to invest in companies with more sustainable and predictable growth profiles. But you're right that if one is to look at examples of poor corporate governance across the emerging markets universe, there's a greater representation of it within the mining sector, for sure.
What's the broad call in India, Glenn, as far as first state investments is concerned? Given that there are some macro risks as well. We've spoken about inflation, which is a story across emerging markets, but at a political level, as far as scandal news is concerned in India, what does that do to you or your decisions as a fund manager?
Well, in many ways, we find the presence of a free press in India to be very positive. We like the fact India is a democracy, unlike China, and we think that the sort of checks and balances that brings with it make for a market which is ultimately more valuable. Currently, however, we do believe valuations in India remain quite high, and have, within our emerging markets fund, reduced our holdings over the course of 2010. But if we are to see some pronounced weakness, whether it's on scandals or inflation concerns or whatever, there's a very large number of companies there that are extremely good quality. Some of the best management teams in all of emerging markets are located in India. So we'd be very happy to buy into any significant market weakness.
Between India and China, which country are you more bullish on?
Personally, I'm a fan of India. I think a democratic structure has less risk essentially associated with it.
All right, then we leave it at that. Thanks very much for joining us and giving us your views on the global emerging markets pack. That's it from Edinburgh. We come to the end of this edition of Global Mantra, but we'll catch you with another special guest next week, so stay tuned for that.